Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting, and the course code for this subject is 363. This is lecture number 27, and the topic under this lecture is accounting entries in the Lessor book of accounts. In particular, we'll discuss a numerical illustration to explain the accounting entries need to be passed in Lessor accounts. The outline of this lecture consists of a numerical illustration to be discussed and the accounting procedure to pass journal entries in the books of Lessor. So basically, we have two parties in a lease agreement. One is known as lessor, who is landlord, and the other one is lessee, who is the purchaser of the lease agreement or the lease. Important points to ponder relating to problem solving. Dear student, one has to bear in mind these important points before attempting a numerical illustration to be solved. Number first is to first of all make sure as to who is lessee and who is lessor, the landlord, in the numerical case example. So thoroughly read the narration and find out the lessee and the lessor, which must be clear before attempting to solve or to pass accounting entries in the books of account of a particular party. Secondly, when the lease is to commence, it is very important to note about the commencement date of the lease agreement, because from that date the royalty fee is going to be charged by the lessor or the landlord. And when the accounts relating to royalties are closed, second date is also important to know about the closing date of royalty accounts, so that the balance available in the royalty accounts may be transferred to the profit and loss account of the relevant party. Third, what is the rate of royalty? In the couple of previous lectures, we have also discussed if the royalty consists of a mine agreement or a lease of a mine where the lessee is going to extract certain minerals on the basis of tons of coals, then the rate of royalty decided between the lessor and lessee was ₹2 per tonnage. This ₹2 per tonnage of coal extraction is known as rate of royalty. Now, whatever number of tonnage the lessee is going to extract from the mine, the royalty fee shall be charged according to the output of units. Fourth, what is the amount of minimum rent? It is very much important to know about the minimum rent decided between the lessor and lessee, because this helps the lessor to know about the short working, and as well as the lessee to know about the short working, what the lessee is supposed to pay to the landlord. Also, one should clearly understand whether it is fixed or fluctuating, this minimum rent. Fifth point to ponder is what is the settlement regarding the recoupment of short working. Like, is there any procedure for the recoupment or reimbursement of the short working what has paid by the lessee in the initial years of the lease agreement, when the lessee was unable to utilize the mine in its good capacity, so that to cover up the minimum rent amount. This short working agreement and settlement may have either fixed rate or fluctuating rate as well, fluctuating time period. When it is fixed for the specific time period, like for example, the lessor may oblige or bound the lessee that short working can be recouped in only first 2 or 3 years since the commencement of the business or the extraction of coal has been started. However, an agreement may also have a fluctuating short working recoupment agreement, which states that if any particular years of operation the lessee was unable to extract the minimum number of tonnage of coal so that the minimum rent or the royalty fee may exceed the minimum rent to be paid to the lessor or landlord. In that particular year, the lessor or the landlord may have an agreement with the lessee that in that specific year and onward for the subsequent 2 years, the lessee may recoup the short working. So such kind of agreement is known as fluctuating short working recoupment agreement. Last but not the least, before attempting the problem, it is very much important to develop or construct an analytical statement that will help you to extract the relevant data from the problem, and it should be prepared so that the student or the one who is solving the numerical case related with the counting entries may feel easy to extract the data from analytical statement and can pass the right or correct journal entries. So this analytical statement or table is very much important. Let's discuss a numerical case over here. Here we can see that Karim and Co. Co stand for company. Karim and company are lessee of a mine. Since the first point to ponder is the Karim and company is lessee, not the landlord, on a royalty of 0.5 rupee per ton of coal raised with a minimum rent of 4,000. Now this statement is quite long, so let's understand step by step. Karim and company is lessee of a mine. They have taken a lease agreement of a mine. At the rate of this rate of royalty to be paid to the landlord is half rupees per ton of coal extraction. Like for example, if the company Karim and company has extracted 10,000 tonnage of coal from the mine, then the royalty fee will be 10,000 multiplied by this half rupee, and it will be 5,000 rupees of royalty to be paid to the lessor. However, the minimum rent decided between the two parties is 4,000 rupees. It means that irrespective of the fact the company is able to extract the coal from the mine or not, it has to pay rupees 4,000 of minimum rent to the landlord. Along with that, the lessee has the power to recoup the short working. Short working is actually any amount paid in excess to the royalty fee so that to meet the minimum rent requirement is known as short working. However, this short working is recoupable in the subsequent years. And how many years are allowed by the lessor in this case? So they have the power to recoup the short working during the first 2 years of the lease only. They have the right to recoup this amount only in the subsequent 2 years, not later than the 2 years. So first year is possible for recoupment, and then the second year the lessee can recoup the short working. However, after the completion of second year or 2 years, the lessee is unable to recoup the amount. The output for the first 3 years is as follows. The lessee, who is Karim and company, has extracted 5,000 tons in 1991, 9,000 tons in 1992, and 8,000 tons of coal from this mine in 1993. And the question, as highlighted in pink, asks us to pass the necessary journal entries in the books of landlord. So in order to solve or pass necessary journal entries as suggested and recommended in points to ponder, one should make an analytical table as mentioned below. The solution starts with with the development of analytical table that helps in passing the relevant journal entries in journal. So analytical table starts with year number first. It clearly mentioned that we are dealing with 3 years starting from 1991 to 1993. So the output and the tonnage of coal in 1991 was 5,000 tons, and the royalty fee due in this first year was 2,500. How does it calculate, or how to calculate this royalty fee? So in order to calculate this royalty fee, we have to multiply this 0.5 per tonnage royalty with the total number of ton extracted. So 5,000 multiplied by this 0.5 will give us 2,500 royalty fee in this year. However, the minimum rent is 4,000 in each case. Therefore, the short working in this first year is 1,500 because the lessee will have to pay 4,000 rupees as minimum rent of the mine. However, the royalty fee due come up with 2,500. There was no surplus in first year, and short working was not recouped as well in the first year. Short working unrecoupable is not mentioned because still this 1,500 rupees of short working is recoupable in the next year as well. So the amount paid to the landlord in first year was 4,000 rupees. Similarly, in the next year 1992, 9,000 tonnage of coal was extracted at the rate of 0.5. So multiply this 0.5 with 9,000. The royalty fee due in the next year come up with 4,500. However, the minimum rent is 4,000, and since we have paid extra amount in addition to the royalty fee in the first years, therefore we have to recoup part of the extra amount. So in this case, minimum rent was 4,000 and the royalty fee come up with 4,500. Subtract both of 4,000 from 4,500 royalty fee, and we got 500 rupees as surplus, which is recoupable. Therefore, in the next year, the lessee will recoup 500 rupees of short working, and the remaining amount out of this 1,500, which is unrecoupable, leftover is 1,000, because this date states that this is December 31st, 1992, and 2 years which has been mentioned that in the first 2 years of the lease agreement, short working can be recoupable, and 2 year has been completed. It was a fixed kind of lease, so therefore the remaining amount in the short working is unrecoupable. And once again, 4,000 rupees has been paid by the lessee to the lessor. In 1993, December 31st, 8,000 tonnage of coal was extracted from the mine, and once again the rate of royalty was 0.5 multiplied with the tonnage, and we come up with the royalty fee of 4,000 rupees. It is the same as the minimum rent requirement, so therefore no short working is being paid, no surplus was paid, no short working recouped, and no short working recoupable available. So therefore the lessee will pay 4,000 rupees of minimum or royalty fee, since both are equal. Now let's move towards journalizing these entries on the basis of analytical table we have developed. As we are dealing with the books of accounts of landlord or lessor, so therefore entries will be passed in the books of lessor accounts, and this is a journal entries, journal. As we know that the royalties are to be paid to the lessor, and we are dealing with the books of lessor. So therefore at the end of 1991 we have to make 3 entries. First, to debit Karim and Company. This Karim and Company account is an account receivable from Karim and Company, and it is an asset account in the books of landlord. Therefore the increase in Karim and Company account is recorded as debit entry 4,000. And second one was the royalty receivable or if you want to avoid or omit this receivable amount, you can do that. The royalty account is basically an income account or revenue account of the landlord. And we knew that when there is increase in the royalty revenue account, which is pertaining to the landlord, it is recorded as a credit entry. So we have done the same. This 2500 was extracted from the analytical table. We can go back in the year first. We can see that the royalty fee was 2500 and the short working was 1500. So we have to mention each value clearly in the journal entry. We have done the same. The second entry is related with royalty suspense account. In order to know that this suspense account is a company's liability account, we can also mention the short working suspense account over here if we would like to change the title from the previous income one. So we can write to short working suspense account as well over here. So when there is increase in the liability of the company, of the landlord, it is recorded as credit. And this has been mentioned on the balance sheet of the landlord as well until it is recouped or the time period has been expired and this remains unrecoupable. In that case, this short working suspense account will be transferred to the profit and loss account of the lessor or landlord. Then at the third stage, you have to write down a shortest narration, which is being minimum rent due to be received from lessee. Now let's come towards second entry. Once again, it belongs to 1991, December 31st. It's time when the lessee paid the royalty fee or the minimum rent to the lessor. This bank account is pertaining to the landlord bank account where the lessee is going to deposit or submit the money. So it is one and the same, just like a cash account of the landlord. So you can write down bank account as well as you can write down the cash account over here. So cash account was debited with 4,000, the minimum rent paid by the lessee, and the lessee in previous case, which was an account receivable, has been collected over here. So the lessee to Karim and Company account, which was an account receivable title in the books of lessor, has been decreased, and when there is decrease in asset, it is recorded as credit. So we have done the same, and then we have mentioned a short narration, that is being cash received from the lessee. Let's understand the third entry. The third entry is to transfer the royalty income into profit and loss account. We have to mention the same 1991 year over here as well. The royalties receivable, or you can omit this as well. The royalty account, which was a nominal revenue account, has been transferred into the profit and loss account of the company. When there is decrease in the revenue account, it is recorded as debit entry, and the profit and loss account generally has a credit balance, and when there is further increase in the profit and loss account, it is recorded as credit. So the royalty earned by the lessor in the third entry will be transferred to the profit and loss account of the landlord. Finally, we can mention short narration as well in the bracket to elaborate what has been happened in the above journal entry, that is being royalties transferred to the profit and loss account. Let's move towards year 1992, where once again we have to record certain accounting entries. Once again, Karim and Company account receivable account will be debited with 4,000, and the royalty suspense account or short working suspense account, which was the liability of the landlord, has been decreased because the lessee has recouped 500 rupees. Let's go back to the analytical table and counter check it out. In year 1992, we can see that the royalty fee was 4,500, minimum rent was 4,000, and the short working was recouped by the lessee. So short working account is the liability account of landlord. This is why there is a decrease of 500 in the liability section of the landlord books of account. Therefore, it is recorded as debit, and then we have made it a royalty receivable or royalty account, which is a revenue, nominal revenue account has been increased by 4,500. Then we can write down a shortest narration being royalties due to be received. And the next entry is related with the receiving of this royalty fee. So the bank account or cash account of the landlord was debited with 4,000 since the cash has been received, and Karim and company, who was lessee account, has been credited and it has been removed or written off with the cross entry. Third, in 1992, once again we have to transfer the amount into profit and loss account. So therefore the royalty account, which was the revenue account, has to be transferred into profit and loss account. So when there is decrease in revenue account, it is recorded as a debit entry. However, we can see that the time period allowed for short working was only 2 years, and since the 2 years has been passed, so the remaining amount in the royalty suspense account or the short working suspense account is no more recoupable. Therefore, the company's liability has been decreased by the remaining short working, which was 1,000, and it will be debited, because in order to decrease the liability, we have to give a debit entry. Finally, both of the balances of these accounts will be transferred into profit and loss account, and the profit and loss account will be credited with 5,500, because when there is increase in the profit of the company, it is recorded as credit. And we can mention a short narration to explain what has been happened in the above entry, that is, being royalties receivable and the royalties suspense are the short working suspense account was transferred into the profit and loss account of the landlord. Let's discuss the final year entries, which are pertaining to 1993, December 31st. Let's go back to the analytical table. Here it is. We can see that in 1993, the royalty fee was 4,000 and the minimum rent was also 4,000. There was nothing in short working, no surplus, no short working recouped, because the 2 years of time period has been passed, so we cannot recoup this short working. Therefore, short working recoupable is unavailable. The amount paid to the landlord was only 4,000. Let's go back and journalize these entries. So here we can see that Karim and company, which was the lessee account, and as well as the account receivable in the books of landlord, was debited with 4,000 rupees. And the royalty account, which is an income account or royalties receivable, since these are not yet received, however this is a revenue account, will be credited with 4,000 rupees. Then to write down a short narration, being royalties due to be received from the lessee, we have to make another entries regarding the reception or receiving of royalty fee. So our bank account, which is pertaining to the landlord bank account, will be debited, or another way around we can also write down the cash account will be debited with 4,000 since we have received the royalty fee, and the Karim and company, which was the account receivable account, will have a cross entry. When there is decrease in an asset of the landlord, it will be recorded as credit entry. So we have done the same credit entry of 4,000, and then has been mentioned a shortest, concise and precise narration statement regarding being royalties received. It actually tells us about what has been happened in the above transaction. Now it's time to make the final entry to transfer the royalty, to close the royalty receivable account or the royalty account, which is a nominal revenue account, and to transfer the balance into the profit and loss statement of the landlord. So when there is decrease in the landlord account, which is a revenue account, it will be recorded as debit, and the profit and loss account, when there is increase in the profit and loss account, it is recorded as credit entry. So we have transferred the revenue earned over the royalties from this mine into the profit and loss account of the company. And then has mentioned the shortest narration in the bracket, like being royalties receivable transferred to the profit and loss account of the company. So basically, the books of landlord or the lesser books of account is totally the reverse of what we have discussed in the lessee's book of account. So this was all about how to record our journal entries in the books of lessor or landlord. Thank you very much for listening to this lecture. If you have any question, feel free to ask on KCMS, or another way around, you can also ask your queries on my official email address as mentioned in the footer of this lecture. Good luck for the day. Allah Hafiz.